Across all investments, including crypto, of course, there are basically three different outlooks. And in each case, they're based on the time frame. We have short term, that could be anywhere from 1 to 6 or so months. The intermediate term is between 6 months and 2 years. And then long term is anything beyond 2 years. Of course, we at Altcoin Buzz are bullish on crypto all day, every day, long term as well. But today we actually have a warning for those of you that choose to trade short and medium term in this market. If that is your strategy, so be it, but you may want to hold off for the time being because we're in kind of a dangerous and rather choppy phase. And in this video, we are breaking down exactly and specifically why it's looking so risky in the short-term crypto market. Welcome to the channel. My name is Maddie and this is Altcoin Buzz. All the best of luck if you choose to invest. I wish you well. Just remember that I'm not a financial or investment advisor and that this video by extension is not official financial or investment advice. So I don't want to be the bearer of bad news here, but I want to discuss why US economic data is looking very bleak and it's entirely likely that it's going to get worse actually. It's bad right now. Don't let Instagram profiles of yachts and sports cars and all that nonsense and moving to Dubai fool you. Things are kind of bad, objectively, by the numbers. The American economy, of course, leads the world. That includes the crypto world. And so what happens in terms of U.S. economics matters. And many think that the U.S. is already in a recession. The other half thinks that one is coming soon. That's a possibility for sure. For example, this inversion of the yield curve, where short-term US bond rates pay more than longer-term bonds do, is the biggest and most consistent recession indicator and signal that the US economy has. And it's been inverted for months here and just uninverted and went back to normal. Normal is when holding for longer, let's say 10 years instead of 2 years, pays you more. And then we have U.S. government treasuries and commodities. They're signaling the U.S. is in a recession right now. That's despite the fact that stocks are not behaving that way, but we can kind of separate those two for the time being. And then perhaps most importantly is the fact that inflation for the U.S. dollar is the highest it's been in 50 years. And that's despite the fact that they cherry pick their data for things like CPI and their basket of goods and services that they base the inflation numbers on. That's cherry-picked to reflect the best possible numbers. And even at that, it's the worst we've seen in 50 years. Treasury Secretary Janet Yellen called it a risk to the economy hitting a so-called soft landing. That's slang, by the way, for staying out of a recession. U.S. unemployment rates are also uncertain. More on that in just a second, though. U.S. mortgage rates for home buyers, that just went down from a 25-year high of 7.5% to its current 6.35%. This, of course, makes buying the same, let's say, $250,000 home much more expensive than just a few years ago. And so, of course, the result is that mortgage and home buying demand is low right now. And look, you may think to yourself, well, whatever. I live in, let's say, Canada, as I do. I live in Europe. I live in Asia. I live in South America. I live in some other country other than the United States. So why should I care? Well, the U.S. real estate market is one of the best and most liquid investment markets for property, really all around the world. And even if you take that, putting it aside, it's a huge and important part of the global economy. Its poor performance can easily affect things like stocks, bonds, even crypto, despite seemingly being unrelated. And that's because people are not moving, they're not buying more homes, they're not even selling. Instead, they're either happy or possibly trapped where they currently are in a pretty expensive home that they got at a lower interest rate that they could no longer afford if they had to buy it again today at current interest rates. And that's a big problem. We talk a lot about liquidity often and as much as possible on this channel. Global liquidity means money moving around the world. And we know that some of that money will come into crypto, inevitably. But when money in the enormous US real estate market is not moving, that obviously means liquidity everywhere is lower. And if we observe in our crypto market a lack of price movement, really it's because there's no new money coming in. And that's just one of several side effects really of this disease that we're witnessing.
And so if this market pulls back hard under this level and then consolidates and comes back, we're likely to sell and stall.
Okay, as promised, let's spend some time now and discuss US jobs data. It's pretty bad here, so I want to take at least a minute and separate this data from the rest of the economic stuff that we've been discussing. Look at this chart here. You can see that since the year 2000, the labor participation rate in the US economy has been on a pretty steady decline. That is the number of people working or seeking jobs. In a healthy economy, this number is rising, whereas in the US, again, it's falling. Its high was 67%. That was in early 2000. Now it's 62%. And it's only a 5% difference, yes. But if you think about it, that equates to tens of millions of people who are just not even bothering to look for work anymore. This is actually a terrible long-term signal. But as bad as it is, that's not even the worst of it. The allegedly positive US jobs data that we've had for all of 2024 so far has been revised, and it's been revised down, way down. In fact, it's the largest downward revision that's been observed in 15 years. And sadly, many of those new jobs created are in government, not the private sector, where arguably we need them a lot more. Government payrolls are on the rise, while non-farm payrolls, aka the private sector, those are falling. The real economy, the private sector economy in the US, is not growing. It's that simple. So we have to ask ourselves, could your favorite crypto project buck this nasty trend and still grow? Yes, it's possible, but you'd have to be swimming against the current here. And the flow of the current is high right now in crypto. It has been high for the last 6 or so months. It's pretty powerful, and it's not easy to swim against. A Bitcoin bull market with choppy trading and a really tough altcoin market. There is certainly a reason why we call it a Bitcoin season first and then an altcoin season. Right now, the currents here are only in your favor if you're a long-term investor. And despite the fact that Bitcoin is up on the day of this recording, we have seen poor, choppy, and uneven returns in the short and intermediate term. We're looking here at the last 12 months of performance. And Bitcoin is the leading and healthiest asset right now. And despite that, it's still having a hard time. It has yet to reclaim those all-time highs from earlier in 2024. So what do we do with all this negative news? Could the crypto market shake it off? Yeah, that's possible. But will the market shake it off? That's different. Probably not, I would say. That's where we are in the short term. And you should hold what you have, especially if you bought quality. But I wouldn't recommend too much activity here as we enter the next few months. You can see that with all this uncertainty, short term, and again, even intermediate term traders could have a hard time figuring out the market direction. Things could continue to go down slightly, perhaps up moderately, choppy, sideways. Again, if you're a long-term investor, which we recommend for the best returns for the risk over time, then you should be just fine because you'll wait as per your strategy. Wait for the dips in at least the projects that you like the most and buy them, dollar cost average, even in small amounts. It eliminates the stress. It automates the situation. If you have the discipline to do that, you will thank yourself in the long run.